Good morning, this is Andrew Abraham from Trend Following Mentor. In this short video, I'm going to talk about selling short and the proverbial death cross. And, first of all, none of this is meant as any personal suggestions or anything. It's more educational. And that's what I like to do, is like to share. And also, the truth of the matter is, it also helps me become a better trader. And even though I've been trading since 1994, I'm studying all the time and working really hard to improve the trading. So basically, short sales should only be taken in a very early stage of a bear market. Well, we're not in a bear market. What I do is I have a very simple rules, which I'll show you. They're right here. And basically, I am long. And you don't want to go short during, let's say, when the market is in a rally, even though, maybe this rally's in question, but you take it day by day. And the other thing you need to take into consequence is that this is an old bull market, that it's surpassed, if you want to look at 3 years, 5 years, if you're looking from 2009 or 2011, it's old. But before the market will turn over, you have to see distribution days like here. And that's really, the simplistic term is that you have more selling going in with higher volume. And we've only had one of those days on the NASDAQ and one on the S&P 500. So basically, you're looking that you can start having failed leaders. You want to be in a bear market, and it's the prior leaders. And to me, one prime example that stands out, which I'm going to talk about, is Priceline. And I'm just saying this as an example. It's not a trade recommendation whatsoever. And what you do is you can look at it where you have this fantastic run up to 1400. Now we're at 1100, let's say. So what is really the point here? That you want to look at prior leaders in the prior bull market. First, again, to reiterate, we're not in a bear market, but you want to look to go short at the beginning of a bear market. Because also going short is rather tricky. It's a lot tougher. So really what you want to see is that, and this is the 200-day moving average, and this is the 50-day moving average. And this point right here, I can make it a little bigger, is called the death cross. And what's interesting is you have this big rally up, and then boom. It really was not tradable. And the other thing that you can try to see is, let's say prior leaders don't die easily. It fell and hit the 200-day moving average twice, went above the 50, stayed above the 50, went below the 50, went below the 200, and then it gapped up again above both, even though you had this death cross. And that's what you can see also when you're going short. You're going to have a lot of movement. This is a big move. From here to here is a very big move. You want to almost try to go short after there's almost like a capitulation, several months from the prior highs, which we're counting them, but we're not in a bear market, because then you're not going to have all these, let's say, buy the bargain kind of people. Like people here, they stepped up, they said, wow, this was a $1,400 stock, I can pick it up for $1,000. I'm going to make a lot of money. Well, you almost want it where it's a capitulation, and you want to watch the volume as well. I'd like to see this, if we get back up towards the 50 and fail, that would be an interesting place to go short. At this point, it's too risky. And even more importantly, we're not in a bear market. So really what you want to do is, like I said, with the volume, you want to see that there's a lot of churning in the volume. So this is the point that I just want to talk about with the death cross and selling short. Right now, it's not the time. Actually, right now, we're in somewhat of a rebound from the lows, and who knows, maybe we'll keep on going back up. There's simple rules which I determine to be in the market or not to be in the market, or even potentially short. And just to reiterate, if you're looking to short, you want to short prior leaders that have fallen out of bed. Again, this is Andrew from Trend Following Mentor. If I can help you in any way, you can email me. I have trend following courses. I also offer one-on-one personal training, and even more importantly is the psychology of trading, which most people don't even think about. That's what makes a difference between a successful trader and a not so successful trader. Thank you very much.